What's going on, YouTube? Welcome back to another episode of Oracle's TA, where we take a look at the technical analysis of fundamentally sound cryptocurrencies such as Bitcoin and Ethereum. Today, we're going to be starting with Bitcoin and just doing a quick recap of where we left off on July 26th, which was our last episode. Remember, if you like the content, subscribe, hit the bell notification button, and smash the like button to stay up to date with all the new stuff coming out of OIG. So going back to our last episode, we saw that Bitcoin was currently experiencing an interaction at the area of confluence. And this area, we did mention in the past, has several confluences such as the daily level, weekly level, as well as this Fibonacci. And also not to forget our point of control, which is hard to see because it's on the same level as our weekly. However, we did see that there is just a lot of confluence at this area, so we did want to see some sort of response from Bitcoin with interacting at that area, and we did. So we saw a bullish market structure change on a short-term time frame, and by short-term I mean the 15-minute chart. And from there we did see a quick rise up, or relatively quick, up to the $24,600 level within 4 days. And why is this important? Well, we did mark out this area here and did mention that we could potentially see some sort of swing failure pattern, and that this would likely be an area to short if we did see price action get there. Now, on the first attempt here, we did see that price action failed to hold that level as support and came quickly back down and consolidated under the support or potential area of interest, and once again blasted through that level, however failed to find any support and quickly came down and has been range bound in a descending range since that. And that has seen a drop of 8% within 3 days. However, we did see a small rise, so we're currently sitting at 5% from our high at $24,600. So now let's look at the levels that we have marked out. And it's also good to note that these levels have been on the chart for several weeks now, and that the levels that we are looking at for support are really the daily up here, the daily at 21,000, as well as this area, which we now have proved to be support. So why is this important? Well, I'm going to be looking for long positions simply because of the volatility within the market, and those long positions are likely to be at areas that have a lot of confluence. Now, we could see something on this daily where, price action trends down a bit, comes back up. However, I'm looking for more of a swing trade, so I'm not going to entertain such a trade like this, as this is more geared toward day traders. So looking at the chart, we should see, or rather we will see Bitcoin make its way through this range. However, it could easily break out now and continue higher. I just don't see the strength in that or the potential for that move, as when we look at this area here, we saw extreme volatility and then we saw a move up. However, we are pretty much trending down and hugging really the bottom of the descending trend line, meaning the bears seem to have more of a control than the bulls. Now, with that in mind, where would I look for a long? I would simply be waiting for price action to somehow come back down to this level here, as, like I mentioned before, has been used as support. Now, there's also something to note that I added a level here, which is the monthly level, and that is because we just had a recent monthly close 2 days ago. That monthly level is something I'm looking at to see some sort of swing failure pattern. So something along the lines of price action moving down this descending trend line, coming here, establishing some sort of support, however failing to do so and breaking right through. And this is where I think people will have extreme fear, because the $20,000 area is a very key level when it comes to the psychological aspect. It was a previous all-time high in the previous bull runs. So what do I see happening potentially is price action, like I said, moving down, coming up to this level here, and then just failing to hold, which then causes the market to fear more downside, and then potentially finding support at the monthly level, and hopefully, for the bullish case at least, find support up here at the area of interest and continue its way up. Now, again, it's good to note that this is more of a short-term examination of the price action within Bitcoin. A lot of things can change, and that's why I think we should also take a look at the long-term time frame. And it's very good to note that we have seen some sort of support bounce off of the $19,760 level, which we could just round up to 20,000. And we can see that this was the previous all-time high for a good while, actually, until it was broken, over 3 years later. If I'm doing my math right, 1,000 days, 3 years, right? So now we've come back down to that level after ranging up, and now we've seen some sort of support bounce. It is likely that this is a very strong level, a pivotal level for price action, and that we could trend higher. However, I don't want to assume that further downside is not possible. We haven't seen it in the past, simply because we don't have that much price action from Bitcoin. I mean, even though Bitcoin has been around for over 10 years, it doesn't necessarily mean we have all the necessary data to make that assumption that we won't trend lower. So just something to keep in mind. I also wanted to take a look at the US dollar index, and this is a very important chart, simply because Bitcoin's value is determined by the strength of the dollar. And in some cases, we've seen a weak US dollar somehow provide the necessary environment for Bitcoin to prosper. So it is good to note that we are somewhat breaking out of this long-term trend line, and that the US dollar index is trending higher, which could potentially mean we could see a move out of Bitcoin. However, if it does rip up, I would expect Bitcoin to take a bit of a break in terms of positive price action. If we do see somewhat of a move down from here, I would then expect Bitcoin to see some sort of positive price action until we do come to this area here. And that's going to be a pivotal factor as well, because if we do use this area as support, strictly speaking for the US dollar index, we could then see a potentially weak Bitcoin and price falling from the high it sets on this way down here. So this is all speculative, obviously, right? But it's just good to note that there are several factors in determining the potential areas of interest when looking at Bitcoin. So let's take a look at Ethereum as well. Now, just a quick recap from our previous episode. We did see Ethereum trending lower. I did mention that, even though we do see Ethereum trending lower, and at that point it was about almost 20% down from its recent high, we're coming off of a somewhat of aggressive move up, which is about 60% in 11 days. Now, with that being said, we did mention that a relief rally was necessary, and this could be potentially interpreted as a relief rally. And from there, we've since pumped up 30% in just under 2 days, or just over 2 days, sorry. And we did consolidate right above this support here, which is the monthly open. And from there, have somewhat lost the area, come back down to this daily. We did a swing failure pattern of this low, and from there have gone up about 7%. So it's still very early to say what Ethereum is going to be doing and what it could do, but it's also good to note that we have found support. We are creating higher lows as we move our way up, and that Ethereum overall is looking much more healthier and bullish than Bitcoin at this point. And again, like we've mentioned several episodes ago, a stronger Ethereum signifies a more dominant hold on the altcoin market, which then means more confidence within the altcoin market. So that's something we're going to be seeing soon. And it all pretty much depends, like we said, on Bitcoin. So wherever Bitcoin can find support is very important. And when it does find support, whether it be here or here, we could potentially see a very substantial rally out of Bitcoin. But again, I don't think we're out of the murky water yet. I think there's still more downside. This is just a relief rally for, the price action that we've seen over the course of several weeks now. And it's just, we've gone down 45% in less than 10 days, and we haven't really seen a move up since then. We are up 36% within 60 days, but the bearish move down, it really showcases the strength of the bears over the bulls, with it taking 42 days to reclaim a fraction of that lost price action. But again, nonetheless, we are still printing higher lows on the Bitcoin chart as well as the Ethereum chart, and we're going to be seeing a lot more out of Ethereum in the coming weeks, simply because the strength that it has showcased from this move up. So that's all for this week, folks. Remember, if you like the content, subscribe, hit the bell notification button and the like button to stay up to date with all the stuff coming out from OIG. Also, be sure to catch our previous AMA with Satter. It was a great chance to see what the future will look like when it comes to Web3 streaming and the entertainment industry interacting with the blockchain industry. So until next time, guys, we'll see you soon.